introduce Mr. Ted Cole with Davenport Public Finance, the county's financial advisors.
Good evening. The board members should have a handout, and it's exactly the same information that's up on the screen. Here this evening to discuss the financing approach for the project you just heard about. We will be asking you all to consider approval of a resolution that's been drafted by your bond attorneys, Walmart Bond Dickinson. This would be the first of two board actions, so it does not bind you to doing the financing, but it gets the process started, and particularly kicks us off with the local government commission process. So there is a resolution for you all to consider this evening. If you decide to take action on that and it's approved, that will move us forward. An application has been submitted to the LGC. We have asked to be on their January 11th meeting to approve or consider approval of this financing. You all would meet again on January 3rd to consider your second of the two approvals. So again, this is an important decision this evening. If you do approve it or adopt the resolution, it allows us to move forward, but it does not commit you. All of this would be subject to your next approval in January and the local government commission approval on January 11th. So a little bit of the background there. Page 1, there's page numbers in the lower right corner. There we go. Just a couple of talking points. We did put a request for proposal together, worked closely with county staff in putting that RFP together to solicit funding for this project. We did use a not to exceed number of 20 million. That was also the number that was in the public hearing that you held tonight. That's just a not to exceed. It does establish the cap, but ultimately you all can approve a financing for any amount below that as we move this process forward. We reached out to a number of the bidders. We fielded a lot of questions. We worked with staff to answer those questions. Ultimately brought proposals back on a day and time specific. We did receive 6 proposals for financing. We spent time reviewing those proposals with staff and your bond attorneys. Ultimately, we've come up with a recommendation that I will share with you for bank financing. We did look at an alternative to bank financing, and that is going out to the bond market, and I'll talk a little bit about that in a moment. Ultimately, what we're recommending is to move forward with bank financing, but I will cover the bond financing approach as I get to the next couple of pages. And as I said earlier, if you all do consider approval of the resolution this evening, that will kick off the process. We'll be back to you on January 3rd for your final approval or consideration of a final approval, and then the LGC on January 11th. And that would position us to close on the loan, have the funding in hand so that you all can award a contract or officially kick off with a vendor, knowing that you have the funds in hand. Summary of the proposals is on page 2. They're listed from low to high on the interest rate. So Pinnacle Public Finance, you see over in column C, is a rate of 1.75. We asked for 15-year proposals, so we have fixed rates for 15 years, which is sort of the term that we've been discussing as it relates to the expected useful life of the system. The rate would only change if you all did something to change it, if you did something to prepay the loan. So Pinnacle at a 1.75, Sterling Bank at a 1.87, and you go all the way down to line 6, Signature Public Funding Corp at a 2.28. So from low to high on the bank proposals, we were almost a 0.5%, a little more than a half a percent low to high, which is not that unusual. The banks can be fairly spread apart in their interest rate. You'll see at the very bottom the public sale approach. This is rather than going to a bank to borrow the money, this would be issuing bonds in the bond market, which Franklin County has done before. There are additional documents that need to be done. The bond ratings need to be put in place. There's an underwriting of the debt that takes place. It's a form of financing that's done on a regular basis, and again, Franklin County has done it. Based on our estimate, and this is a pretty good estimate, we're able to estimate that market pretty accurately. When we put this presentation together, the public market rate was about a 158, 159. The issue there is that it's about a 60 to 75 day process to get that rate locked in. There are things you need to do. If you said this evening, we have bank bids, we have a public sale option, we want to move forward with a public sale option, we would be 60 to 75 days out before we could actually lock the interest rate. So during that time, while documents are being developed, ratings are being secured, we are moving with the market, whether the market moves up or down. And so we felt like in discussions with staff, the rates were so close to where Pinnacle was. Pinnacle, the rate was locked. There is no floating with the market. They have locked that rate not only for the entire term of the financing, 15 years, but they've held that rate for a closing by January 21st. So you have no exposure to rate movement. And there has been a reasonable amount of volatility in the bond market and the lending environment here recently with things that are going on. So we felt like because the bank rate and the public sale rate were very close to one another, and you'll see the numbers in a moment, cutting to the chase, we're recommending that the county consider moving forward with Pinnacle Public Finance. I will note under call provisions just quickly, it is non-callable for the first 8 years, so you can't prepay it for the first 8 years, but after the first 8 years, you can prepay it in whole at any time at what we call 100% or par, no penalty, and you can prepay it on a partial basis at least or one time per year in a minimum amount of $250,000. So you could do a partial prepayment for more than the $250,000 if there were ever a reason or a desire to do that. You'll see Sterling National Bank, which is the next best bank bidder, non-callable for the first 5 years, a 1% penalty to prepay it in years 6 through 8, and no penalty thereafter. Public sale, pretty standard that has a no-call period for 10 years. That's very typical in the public sale approach.
Ted, are
Yes.
these loans front-loaded on the interest rate, or are they leveled out across the term of the rate?
The rate will be applied to all 15 years. Now the amortization of the principal will be what we call level. So it will be a level amount of principal paid for each of the 15 years, 1/15. Interest will be calculated so the total payment starts higher and declines, but the rate is constant. And you'll see if you look on page 4, I'll come back to page 3. If you look on page 4, you'll see the debt schedules based on a $16.5 million project. And you'll see that $16.5 million project on line 7. That's our starting point for the comparison. We've included a placeholder for issuance costs on line 8 and 9. You can see what the total borrowing is. And you can see the payment dates. We've assumed a January closing. We've assumed that you make your first interest payment in August of 22, which is your next fiscal year, FY23, so nothing due in the current fiscal year. And you've got principal payments starting in fiscal 24. And you'll see that first year, fiscal 23 is really interest only, so it's a smaller payment. But then in fiscal 24 and beyond, it's principal and interest, and you'll see for each column, it starts high and it declines. And that's because the local government commission in particular says we want this done as level principal. So when you calculate the interest, it's higher in the first year and it declines. Unlike a mortgage where your principal and interest every year is level, they like this level principal structure. So this would be consistent with what they would expect to see. What you'll see over the life of the loan, again, $16.5 million, is the Pinnacle is about $19.1 million of total payback, Sterling 19.3, the public sale 18.9, And just for comparison purposes, the planning work that we did at a planning rate of 4%, we were up around 21, 22 million. So we've come in well below the planning rate. And you'll see that the difference between Pinnacle and the public sale over the life of the loan is about $240,000. And over that 60 to 75 days, the public market rates only need to move by what we call 19 basis points, which is not an uncommon movement where that rate would equal what you could have with Pinnacle. So all of this comes full circle that we're recommending that you consider moving forward with the bank financing and specifically Pinnacle Public Finance. And you'll also see in your resolution that there is additional language that says if we're unable to come to an agreement on the collateral with Pinnacle Public Finance, that we can move on to Sterling as our second best alternate lender. That takes me back to page 3, where we've given you a little more detail on Pinnacle and Sterling. They're very straightforward proposals, installment financing, not unlike other bank loans that you all have done. We've talked about the prepayment language. Pinnacle has some bank fees, $7,000 if there's no real estate involved in the collateral, about $15,000 if there is real estate. Escrow requirements: when this loan closes, all of the money will be deposited into an account where you all can requisition the funds as needed to pay the vendor. And then the collateral requirements, there's a number of bullet points there. Pinnacle and Sterling are looking at this in much the same way, that they are expecting to take a security interest in some or all of the equipment and facilities that you're building for this system. They are not expecting to take any real estate, so not expecting to take any sites where the towers are built, but the equipment itself. If a tower is being built or equipment's being installed on private property, they'll want the ability to access the property so that if they ever needed to get to the equipment, they've been able to do it. Pretty standard in terms of their approach on the collateral, but because you all are still making a decision between the two vendors and there's different specs on the number of sites and some other things, our discussions with the banks have been that I think we're all on the same page about what the collateral of the loan would represent. And we do recommend Pinnacle, but we wanted your approval to allow us to pivot to Sterling if we ran into an issue with Pinnacle on the collateral. Don't expect that to be the case, but in the interest of time, because you only have a certain number of meetings, if we find that we can't come to an agreement with Pinnacle on the collateral, it gives us the ability to go to Sterling without jeopardizing their rate. Again, I don't expect that to be the case. We've closed loans with all of these banks before, and we have pretty thoroughly discussed it with the bank, their attorneys, y'all's attorneys, and we feel like we shouldn't have any issue coming to an agreement on the collateral for the loan. And that will all be laid out in the next approval that you all will be asked to consider on January 3rd. So with that, page 5, it restates our recommendation at the top. We've discussed this with your staff at length, recommending that we move forward with bank financing with Pinnacle. We have Sterling as an alternate. If that were to meet with your approval and you consider approving tonight's resolution, then we'll be back on January 3rd for your second and final decision. The Local Government Commission on January 11th. Again, the application has already been submitted to them. We're talking to them later this week to review the application and the project, so we would expect that to be moving along just fine. And we'd be in a position to close the loan. We would need to close the loan by January 21st. And by closing, that means the money is then in an account where you all can access it to pay invoices related to the project. Any questions?